market just had a tremendous rally in the last 3 to 5 months. We think we're expecting a lot more volatility over the next few months. But if you do have a 6 to 12-month time horizon, we think there's going to be a bias to the upside. Very importantly, we think what's worked over the last few months is not going to be what's hot over the next 6 months. So you want to look at different areas for the next leg of the stock market rally.
You're the second guest we've had on this hour that thinks that there's going to be new leadership. What exactly will that leadership be? We heard earlier on it might be value stocks.
We think it probably will be value stocks. If you look at growth versus value this year, growth is up about 20% and value is down 10%. That's the widest differential you've had since 1999, and you had the internet bubble. In the aftermath of that, value did exceptionally well and growth was down for a decade. We don't think it's going to be as extreme this time, but we do think there are a lot of very good businesses that are paying good dividends at 10, 12 times earnings, and that's going to be the place to make money rather than paying 50 to 70 times earnings in some of these very hot technology stocks.
What types of companies, though, that are trading at these modest multiples you speak of? I don't see them very much anymore because we're so focused on some of the other ones with extremely high multiples. What types of these companies are you looking at? What industry groups, what names are you looking at that could actually be value names?
Pretty diverse. So we're definitely finding opportunities in healthcare. Companies like a CVS or a Gilead are both at about 9 to 12 times earnings with very healthy yields. Electric utilities have been something we've been wary about for a very long time. They've come back very nice. They've done very poorly this year, and as a result, the stocks are very attractive valuations. So companies like Pinnacle West, we think, are very attractive down here. Telecom companies like AT&T and Verizon are at great prices right now. We think you're getting a wonderful, safe yield. They should do quite well. So really a lot of places in the market. We do like select technology, but we definitely don't think technology is going to be nearly as good going forward as it's been in the past.
All right, so if it's in technology and it's not Microsoft or Apple or NVIDIA or something like that, what is it?
Well, two dullards in technology have been Cisco and IBM. Cisco has done okay, but it still sells at about 16 times earnings. IBM has a new CEO. We think he's very sharp. We think he's got the right formula going forward. You're getting north of a 5% yield with that and under 11 times earnings. You don't want to buy IBM as your technology exposure, but we think as an old industrial, it's at a real attractive price.
All right, so there are all these different themes about valuations and rotations among sectors and market caps. One of the things that we're not talking as much about with you right now is COVID-19, the trajectory it's on, the effect on the elections. Are all those variables just things that are just noise in your mind, or should we pay attention to them as investors?
Well, you've definitely got to pay attention to them. We don't think most of them are that investable. So in terms of COVID-19, we think you're making progress right now on the vaccine. You're making some progress on the treatment. The country clearly has to do a lot better in terms of controlling it, in terms of rolling out the economy, in terms of face masks and social distancing. If we can do that with social distancing and face masks, we think we're going to have better progress in terms of COVID. In terms of the election, we just did a study which looked at 1946 to 2019, and very interestingly and good for investors, we found there was not a lot of difference in terms of the returns that Republican presidents or Democratic presidents have. In fact, there was a slight bias to Democrats. So that means that if you're an investor and you're worried about the election, you really don't have to worry as much as you were thinking you did. And you also shouldn't change your portfolio that dramatically in anticipation of the election and if you think there might be a change in leadership.